Mic check, mic check, 1 2 1 2. What's up, you guys? Today is January 31st, 2024. It is the last day of the month. And so, we've had an interesting month. A lot of things have happened thus far. We've talked a lot thus far with the channel, just going over a plethora of information. And it's been a good month just in terms of being able to accumulate knowledge. Now, the question is, where do we go from here? So, we had the FOMC meeting today where the Federal Reserve, Jerome Powell, essentially said not much of anything, basically saying, hey, we're going to go ahead and stick with the interest rates here at 5.25 to 5.5%. And there's no meaningful reason to necessarily take them down anytime soon. Now, we know he's going to go through his typical spiel. He does it every single time. And at the end of the day, markets will react not based on what he's saying only, but generally what they are expecting the economy, for that matter, to look like here in the next 6 to 18 months. And so the key thing is, when it comes to investing, markets always are forward looking. They're never backwards looking or in the moment. So as of right now, we have the NASDAQ kind of taking a little dumpy dump today, Bitcoin following. So, we did have 43K, 42K Bitcoin. We've actually just crossed under, 41,000 and some change. So, nice little dump action and potential might be a window to find ourselves DCAing here pretty soon. So with that being said, we have a lot to talk about today. Today is going to be for those that are just getting started within crypto. Today's stream is all about how to navigate your very, very first crypto market cycle. So, there's going to be a lot of context here. I have my personal experience. I've seen a lot. I've heard a lot of stories. And at the end of the day, getting into your first crypto cycle, most people really don't fully understand what they're getting into until it's done. And so it can be a beautiful thing or it can be a horrific thing if you don't handle it the right way. And unfortunately, a lot of people come to this market and they just become tourists. They'll come for a little bit and they'll have a swift exit when things don't go their way. But I'm going to give you guys some facts. I'm going to give you guys the stats, the information that you're going to need to be able to make it through your first crypto cycle. And if you do that, trust me, you'll come back for a second and a third and a fourth. And you'll eventually realize crypto is an asset class that's going to be able to help you store value. And at the end of the day, that's very important. So what's up in the chat? Who we got? We got a lot of people here. Yes, sir, Dan C. And yes, I did see your message. I have to respond back to you here on Telegram here in a bit. But with that being said, hoping you're doing well with everything. We got Fast Abdul. Watch out, watch out. So yes, sir. And did we win yet? Here's the key. If you're watching the streams, you're taking in the information and you're developing a plan, guess what? You're winning. You're already winning. So we're looking good. We got Angel G. Keep it going. Come on, let's flex on them real quick. Keep it going. All right, bet. So yes, I spotted Fast Abdul in the chat. Yes, he is here. So cool. With that being said, I want to pivot here a little bit and talk about what makes a good, I guess you can say, money. Like, people always ask, or not always ask, but from time to time, people have the concept of trying to quantify and understand, well, what is money? And so money has been several things throughout the decades, the centuries. In this time period of where we live now, we live in a fiat-based world where basically, and it's not even actual real paper money, it's more digitized than ever. And so, but essentially, we lived in a system where federal central banks, they're essentially creating money. And so they're in charge of keeping the supply, depending on how much demand is there. And there's a lot of other dynamics like GDP growth in the private sector and public sector. All kind of things, different inflation readings, CPI, all these things bear somewhat of a credence to what they do with the money supply. Now, every country operates a little different, but in general, congruently, they all like to make the same type of moves. And one thing is for sure, that they all inflate the currency supply. So the money that we use today, so, I'm here in the US. So typically we call these dollars, and if we're paying attention to honest ads, all they are is just pieces of paper with faces on them, truthfully. But, if we're looking at our bank account, or your Bank of America, or your Capital One, or your American Express account, whatever you got, Chase account, you just see a whole bunch of numbers. And as of right now, that's the number that you have to spend or save or invest, whatever you want to do with it. But essentially, money is a means of transfer, basically being able to transfer value from one place to another. So Bitcoin and crypto has that aspect to it to a certain extent. Money needs to be portable. And so here's why gold per se over the last, I would say, maybe 100 years, maybe not has been as advantageous, because who's going to carry around a whole bunch of gold bars everywhere they go? And coins, the jingling coins in the pocket, not the most likable situation. So they came out with these dollars, and so we used to be on a gold standard where basically forever. And here's the thing, I want to actually explain what that actually means. So when we were on the gold standard in 1971, in the UK, they were actually the first to come off the gold standard in 1913, the same year that they created the dollar, by the way. But when we came off the gold standard, previously what we were doing is we were allowed to have the amount of dollars as what we had in reserves in terms of like actual gold in our vaults. So if you only, let's say, for example, if you only had $2 trillion worth of gold, or the value of the gold on a fiat basis was 2 trillion, that means that's all you could have in the monetary supply as far as the actual currency. Now we've gotten off of that, and we've switched to fractional reserve currency and all this kind of stuff. But at the end of the day, money is supposed to be a couple things. It's supposed to be a means of transfer. It's supposed to be a good money. It's supposed to be a store of value to a certain extent. And so it needs to have portability. And at the end of the day, it needs to be a consensus agreement amongst, really, truthfully, hundreds of millions, if not billions of people. Hey, this is something that we can all accept. So those things in particular. Now, the money that we have, it does, the consensus mechanism pretty good, where enough people agree to transfer and use it in the United States with the Bretton Woods Agreement. So, I'm kind of giving y'all a little bit of history about money here. The Bretton Woods Agreement was simply saying, hey, the United States is going to be the reserve currency. Hey, if you guys want to be able to have the U.S. as a trade partner during that time, the U.S. was hot stuff. Y'all have to settle many, or if not most, of your transactions in dollars. And so that's why we're here where we are today. But at the end of the day, it does not stop incredible amount of stimulus or incredible amount of debt creation or debt taking by these governments, and essentially like these central banks that are working with the governments. So we talked about, okay, it's fairly portable what we have now. It's really just numbers on the screen. Enough people kind of agree, like, hey, we kind of need this. I'll go to Starbucks, you'll go to wherever, McDonald's, and grab your meal. Hey, we all exchange in dollars. But one thing that it does not do very well is store value. Why? Is because there's more creation of it. And so that characteristic of the dollar of what we have is not very good. Now, here in crypto land, store of value is what it's all about. That's why I continue to preach and kind of get this out more and more, especially with these streams. I have it in my regular rotation in my vernacular and conversation of saying, hey, the money that you're holding is not going to do you any good on long-term time scales. You're better off basically like almost like either just spend it now, but don't expect for that to be of anything of value 10 to 20 years from now. It's going to decrease. As of right now, they're just going to keep making more new debt. So therefore, it makes no sense to save in dollars. Now, you can always trade those dollars for something else. In crypto, as we know, I've done plenty of streams explaining why crypto is the best asset. Literally, if you go follow the channel, or if you go into the channel, the first thing that you're going to see is the video called Crypto versus Everything Else. And crypto essentially is better from a store value standpoint than anything else on this planet. I can debate that all day. I have the facts behind it, I have the data behind it. And so with that being said, you want to hedge, or at least try to get an aspect of that apple, right? You need to be able to say, hey, I need to pull in some capital. I need to have some income, but I need to train this, or I need to change this earned income into something that can be good for me later on. So like I always say to this people, when you consider yourself an investor, all you're doing is paying your future self more money. That's it. So your future self maybe doesn't want to have to work as much. Your future self may want to retire. So when you invest today, all you're doing is essentially speeding up your retirement process if you'd like to. Essentially, that's what crypto really helps. But investing is paying your future self. So building those blocks, and I explained this, I was doing a consultation tonight. I was like, okay, a lot of people don't understand, when it comes to their finance, they need to build a home with their finance. So that means a nice, strong foundation. I'm talking about sheetrock. You got your 2x4s, and this is kind of going out to all the people that understand construction, like my dad's a contractor, so I grew up around it. I got my hands dirty learning this process. And so, you do everything. Your finishes go on the roof, all that kind of stuff, shingles. Now, with that being said, you don't just start with the roof. You've got to build the foundation. So that looks like doing small DCAs while you're learning. And the biggest thing is, like, imagine like a nice brick building. You can't have a full building until you literally do brick by brick by brick by brick. Without a continuation of you building bricks, guess what? You'll never have a home, essentially. So a home in the financial world of, trying to say, hey, I'm stable, like no big bad wolf is going to come blow me away because it's all straw, means, hey, I've got a bunch of assets that I've been able to hold on to. I have something to show for all the work that I've done, the income that I've made. I've got something to show for it. And so at the end of the day, investing is the beginning of you starting to build your financial house. And it's really as simple as that. So the way that we see money is a big deal, because we can only do three things with it. We can only spend it. I'm talking about the dollars. We can spend it, which that's what most people do. We could save it, or we can invest it. And I'm opting for more of the last option and deferring the other stuff until it makes more sense to do the other things in excess. And you can do that if you understand that this system is built for people that have money to keep money if you have a certain amount, but you have to have the knowledge to do that. So I want to start off with like talking about, hey, what is money? Now talking about why do we need to ditch it, get into some assets. But then, okay, now that we start to become an investor on our journey, what does that look like once we step into crypto? Like, how does this cycle go? I know that bear markets can be very rough, especially if you bought at the top, but then understanding the difference between that and an accumulation phase and the beginning of a bull run. And just like that little bit of a rise, and then you have that euphoria towards the late stages of the bull run that is anywhere from 6 to 8 months. So these things are cyclical. There's a lot of information out here to help understand it, and today we'll go through it. So yes, sir. Let's see. Hey, Wade is in the chat. What's good? How much do I need to buy Madagascar, the island, not the movie? So that's a good question. If I'm to try to give an honest answer, Madagascar, it's in Africa, man. That's a big piece of land right there. My guess, because it has a movie. If it didn't have a movie, it probably wouldn't be as popular, to be honest. But since it has a whole movie behind it, you might have to come up with a Billy, a Billy or two is my guess. I don't know, but I can guarantee you're not gonna get it by just working. The only way to do that is invest very well, or invest very well. So cool. Let's get into it. I want to show you guys a couple things really quick, and we got to start with something that kind of is a little funny, because I was actually looking at this earlier and I was like, yep, that's right on time. So a couple things. So we'll go all the way up. Like, there's a lot of stuff to kind of consider and look at when we're talking about the memes. But this one here is pretty funny up top. Let me see if I can find it. So, yeah. All right. So now there's a difference between investing and trading. Trading, you're dealing with short-term timescales. You're dealing with short-term, tax, not long-term gain. So you're not dealing with the long-term tax, right? So short-term tax, and highest risk asset or highest volatile asset. This is what this looks like when you're trying to trade the crypto market. So close. And so liquidation. That's kind of what that shows me. Next. There's a lot of things. A lot of things to think about. A normal day in crypto. Let's check it out. Somebody that's new, they're like, what is all this stuff going on? We got the technical guys, got the guys talking about memes all day, memes, all this stuff. Find the top. That's what happened, bro. Making that leverage at the top. It's a good idea. Yep, liquidate it. And bro, find some up. Let me start off with a little bit. Nah, let me bet the farm. So yeah, there's a lot of things to see. A lot of when you're new, you see a little bit of everything. But this is what we're all here for, right? We're all here for this glorious bull run. So check this out. Like this is what the bull run really looks like. Just ripping through the bears, ripping through the woods. Beautiful. Look at the sheer mass, the strength of the move. So that's what a real crypto bull run looks like. Just getting everything out the way, prices going up. Beast. And still going after it. He ain't done yet. Pushing it out the way. So yeah, like crypto is filled with a lot of different avenues. One thing, Robert Kiyosaki. So he wrote a very good book called Rich Dad Poor Dad. He's also wrote many other books. Cash Flow Quadrant is another good one. But here's what Robert Kiyosaki said, and he knows what's up. Why own Bitcoin? Bitcoin is protection against the theft of our wealth via our money. This is true, right? They are essentially stealing from us every time that they make more of it because we have to use it as a unit of account, but also through taxation. So Fed Chairman Powell, Treasury Secretary Janet Yellen, and Wall Street banks steal our wealth via our money, specifically via inflation, right? Taxation and stock price manipulation. So this is why I save and invest in Bitcoin, not stocks, not bonds, and not the fake dollar. Hey, he ain't lying. So, with the gist of what we're seeing, the biggest thing is a lot of different avenues here in crypto. It's key to get the main idea first as a new investor. Understand, like, hey, I'm entering into a little bit different system that is part of a cycle, and understanding a cycle just in general. But let's kind of segue really quick before we get into talking about market cycles. And we just want to look at some price action. So we have the NASDAQ here. And the reason why I'm bringing up the NASDAQ in particular, because the NASDAQ, like people don't even realize, I talk about it all the time. The NASDAQ has already reached all-time highs. Like it's been in all-time highs really since, 2024, like, and even, tipped over to all-time highs in December of 2023. So all-time highs for the NASDAQ. Bitcoin is, following suit slowly, but this is typically going to be, that time period where we may get some sideways action, which is good because it's going to leave room for more upside later. But one thing that is for sure, like this move here that we have seen has been very, very impressive for the NASDAQ. And the NASDAQ is a representation of the top 100 tech stocks in the United States. So, one thing about the move from here to here, a large decrease, I want to say it was about 30% down, but that was recovered all within a year. And as you can see, it really rushed through that 6.18, that golden ratio pretty good, use that support, and it's now in price discovery. So, what you're really looking for support in particular for the NASDAQ is going to be the previous high. That's what you would like to have as support to continue to go higher. But the gist of it is, like, I got a couple reminders, right? The dumb money, and I don't want to say the dumb money, but hey, this is what it is. These are actual terms, financial terms. The dumb money are the people that are just now maybe getting interested. The smart money were the people that are willing to face the when the rubber meets the road, as they say. They were willing to face the harsh times and get their DCAs in, get those large lump sums into the market. They're the smart money. And then now they get to rest on their laurels because, as I kind of explained in another stream before, the key thing is this. We could face another COVID moment. So let's scroll over to COVID. So I got this here. COVID was a situation where I'm talking about under 30 days, we see, and I'm getting the whole move, right? The wick, 30% down. So the people that took advantage of this basing, guess what? They're protected, because even if we had another COVID moment today, so we can go 30% down from the top, 30%. Guess what? 30%. All these guys in this box, all the people that invested in this box, they're protected even if we had a COVID today. It wouldn't hit their cost basis. So that's the key. I'm continuing to preach. Understanding having a low cost basis within a cycle is how you get into forever profit, especially in crypto, but then how you protect yourself from downside risk. So key thing. Now we looked at the NASDAQ and we see that. Now we can also look at BTC, and as you're going to see, we have something similar of a situation where we're starting to curl over just like the NASDAQ. So the correlation, there's still correlation with the stock market and crypto. Now, with that being said, we have a little bit more consolidation here, but whatever the stock market is going to do, Bitcoin is going to follow. It may not be in lockstep exact, but it's going to make its way. So as we're even looking at this, we have a lot of liquidity sitting here in between like that 38K range and that 34K range. And so ideally, what you would want to see is to find some support there, but there's a level here. If we want to put this on like an 8-hour chart, the level that we really do want to try to maintain, even as things get a little bearish for the bulls, is going to be this level right here where we kind of bounced off it several times. We broke through it, but that's how you get people. Like that was all of the shorters that are shorting right here on the breakout to the short side. Guess what? All of them probably liquidated, depending on how much leverage they got, because price pushed all the way back up to almost 44K. And then so now we're just sitting in between these areas here. And the key thing is we really would like to keep that 40K range. If not, then we'll have some lower prices, and that would give some opportunity, especially for a lot of these alts. We're talking about Ethereum, Injective, Solana, Hex, Phantom, Chainlink, Tia, Matic, Metis. We're talking about Rune, IMX, Optimism, Quant, Kusama, Illuvium, Gala. Now I'm just listing them, right? And everything is not to hold, but to pay attention to, right? We're talking about VRA, Aave, all this stuff, Hedron, Synopsis. So a lot of stuff, and even looking at certain stocks. So the key thing is this, at the end of the day, these markets are going to fluctuate up and down, but on the net, we got to zoom out, look at the bigger picture. On the net, I got a whole lot of notes here just to remind us the net assets always will go up more than they will go down, simply because the dollar is devaluating. So it is an asset that people have somewhat of a certain demand for, and something with a fixed supply like Bitcoin has a demand, it's going to be up and to the right through the decades, and that's the key. If you remember that, you're golden. And then so the biggest thing is, as we kind of start to talk about these cycles, I won't do it here on TradingView to start, but you see a lot of up. So we have typically about, and we can really use these last two cycles for a good depiction. We're typically going to see a year of, slow accumulation to upside. And then so typically it's going to be like 3 years to the upside, 1 year for the bear market, and then a shuffle around and then redo over and over. So these are 4-year cycles. Things are good 3/4 of the time. And it depends on where you get in. So if you're only buying tops, you're going to have a sour experience. But if you've done anything this far, 2023 or this year in 2024, you're on the right side of this thing. You're on sides, and you end up doing pretty good. And so let's actually start to get into that. We see Bitcoin on a little bit of a dump, and we'll see what that looks into, because there's a couple earnings. I want to say we have Amazon earnings, some other large companies earnings going towards the end of the week. So we're going to see how that's going to round out. So one thing I do want to look at is the concept of things are going up more than they're going down. So let's actually trek over to this page here. I think this is like an incredible depiction of understanding, like being able to understand, hey, what is the benefit of investing? Because a lot of people are like, hey, I make money, I got a good job, man, I have savings, whatever the case is. I got a nice car, I got a house, I got this, I got that, but you got no assets, truthfully. So what's the point of investing? Like I said, it's to help you have a little bit more resistance to economic downfalls. Out here in the economy, you've got something to rely on, but at the same time, you're paying your future self even more, and it's a good feeling. So investing, what is it all about? Investing is simply saying, hey, I'm going to participate in something that is not the dollar. So it can be real estate, it can be stocks. Here we're talking about crypto. Now, for example, this chart is representing the stock market. And this goes back all the way to 1900, like basically the beginning of, stocks really becoming a popular theme or an option for people to be able to buy. And then so blue obviously is going to say the upside, what happens when the prices are going up. Obviously here in red is going to show the downside, what happens in the bear market. So here's the key. Let's read some definitions and let me see if I can zoom in just a little tighter here. So let's zoom on in. All right. So as we read this here at the bottom, key term to note, a bull market is measured from the lowest close reached after the market has fallen 20% or more to the next high. So if we fall in more than 20%, it's going to take that low. And then once you eclipse that and you start to go up to make new highs, it's counting that as a bull run. Now, vice versa, a bear market is defined as the index close at the least 20% or at least 20% down from its previous high close. Its duration is the period from the previous high to the lowest close reached after it's fallen 20% or more. And so same thing, you're going to take the high, and if it's gone down 20% or more, you're considering a bear market in the stock world. A bear market in crypto, that looks like things going down 75, 85, 95%. So more volatility for crypto, but more volatility to the upside as well. So instead of, because here's the thing, we're looking at this stuff and we're talking about 167-month duration and the total return. And this is, going ahead and looking at the S&P 500 here. The total return was basically 815%. And this took like more than a decade. You can get 800% in a year from crypto. So obviously there's more volatility to the upside. These charts are expanded way, way higher when it comes to crypto as far as percentage gain. And that's why we're in it. We want to have some allocation to the fastest horse. But the net of looking at this chart is saying this. When you stay invested for not just a week or a month or just for a moment, when you pay attention and you're active, and you don't have to look at this stuff every day, but let's say you have a routine of saying, hey, I'm going to check some stuff out maybe 2 times a week, spend an hour. But you accumulate that knowledge, you would be able to find a chart like this one day. And that's why I'm trying to blast it on this stream today. Prices of assets, particularly stocks and anything correlated with stocks, hint, cryptocurrency, are going up way more than they will ever go down. It's even got situations like the Great Financial Crisis. And after that was COVID, But you see like how we have long durations of 155 months, 153 months, 61 months, so this is 5 years. 5 years of good, and then you will have a year of bad. This is a situation where there is 2 years of bad, so 25 months, 44% down. But the key is use these opportunities anytime. Like if this chart is ever like in crypto terms, you see, oh snap, we're going negative of the baseline here. And you see just assets, starting to go into their bear markets. Bear markets present the best opportunities for people that don't use their emotions and understand the game. And so what the game is for you to trade your dollars for assets in the bear market and accumulation phases. Because why? You can get gains like this and much more, especially in crypto, but for long durations of time, you're living life and you're being able to preserve your wealth, but not only that, but create wealth. This is wealth creation here. They don't teach this stuff in school, but the most amount of wealth creation comes from investing money. And so that's the key. And so the actual stat, because I've run the calculations from a lot of this stuff. Here's the thing: 87% of the time, assets are going up than going compared to going down. I'm gonna repeat that one more again for y'all in the back. 87% of the time, assets are going up compared to going down. So that means only 13% of the time. So if you're like looking at a span of a decade, for example, 8.7 years out of a decade, you're going to be doing well. You're going to be able to say, hey, my experience as an investor is going good. And then so just like anybody, let's say you're going to work, you're not going to let, out the week, just one bad work day stop you from going to work. So same thing for investing. You're not going to let one bad investment year stop you from investing. That's the way that you've got to see it. So use like real life terms to start to grasp the concept. So things are more likely to go up than go down. So we'll start there. So that's key. Now, let's talk a little bit more in regards to crypto. So very interesting standpoint is now we can kind of look and dive into these market cycles. So here is, I guess you can say a nice little blog here that was written at the beginning of this year. And what we have here is an article about Bitcoin market cycles. Like we talked about, these are 4-year cycles. And so one thing that if you guys don't know about it, it's the halving. So I'm sorry, not halving, it's halving, correct pronunciation. But the Bitcoin halving is basically saying the block reward for the miners gets cut in half. That means there's a little bit of supply restriction, less inflation for the coin, which is simply means, there's probably going to be a surplus of demand who is wanting something that is becoming increasingly more rare. But the gist of it is basically saying this. The Bitcoin market cycle refers to the recurring pattern of price behavior in the Bitcoin market. So key word, recurring pattern. Characterized by alternating periods of appreciation and depreciation, the cycle is a result of market participants' perceptions and actions such as buying and selling, and is influenced by a variety of factors, including market sentiment. So we're talking about, how do people feel out there, regulatory changes, technological developments, and the wider economy. So here's the key. Historically, Bitcoin has followed a 4-year cycle tied to the Bitcoin halving. I'm going to show you guys a chart of that here in a second. Halving events, even, so here's the thing, which happen approximately every 4 years. A halving event marks a 50% cut of the Bitcoin reward for miners, as I said before, as they receive, these mining rewards for the new blocks and verifying transactions. In effect, the Bitcoin supply continues to increase, but at a slower rate. To knock on effects so basically the knock on effect can be a steep increase in price. And here's the key word, steep, because typically after the halving, we're talking about 2 to 4 months after halving, we're going to see that hockey stick moment where we see a large expansion of capital coming into the space. Happens every 4-year cycle, so assuming that the demand of Bitcoin remains the same and increases after the halving, the next halving is due. Here's the key, April 2024. So with some of this stuff, you got to ask yourself, how exposed am I to the market by April 2024? If you feel like you ain't got enough, hey, get to work, right? Get to some investing here. So here's the key concepts of understanding the accumulation phase, the continuation phase, and that's kind of where we're at now. Like we're out of that accumulation phase. I would consider that accumulation phase to have been for BTC, especially in between like that 15,000 to probably about like that 35K. The moment that we were able to sustain above 35K, we're now into the continuation phase. You have the parabolic phase, which this is when the altcoins are ripping. We're seeing 50Xs everywhere. This is what we all are here for. But the key is most people, especially new investors, so in their first cycle, they want to come in only during the parabolic phase. And I'll outline that on the chart. The key is if you're here now, you're a step ahead. So you're good. Not great, because great was the people that were investing in 2023. But nonetheless, all sins are forgiven in crypto when the green candles get printed. And so here, the key is this, like understanding after anything goes up for a considerable amount of time. So anything does a 5X, a 10X, a 20X, a 100X, whatever it may be. You have to understand that once you have so many people that are in profit, people are going to take that profit, and there's going to be a cascading effect causing a bear market soon thereafter. And like I said, these bear markets in crypto can be very brutal if you're buying only the top. That's why you want a DCA throughout the years, and that way you don't have to really worry about that as much. But here's the key. So if we were to look at this from a chart and a color standpoint, we can really look at the different periods of time and talk about them. So how we talked about, there is an accumulation phase. So accumulation, growth, bubble, and the bear market crash. So and like I said, this stuff, it's so cyclical that there's a lot of on-chain data, but even anybody that's looked at this chart for half a day or even a couple hours can be like, I think I have a good feeling of what the modal outcome or what the base case, because there's always deviations, things aren't always the same, but what is the base case that we can not necessarily expect, but what is the trend from a cyclical long-term pattern? Because money likes to move similarly through the years and through the time. So the best part of what we're all looking for, we're looking for these periods in here of like this yellowish orange or whatever you want to call it, this tan color. This is when we have the hockey stick moment, prices going up, everybody's happy. This is Bitcoin. And so other assets like Ethereum or things like Postchain, layer 1 coins like Phantom, whatever the case may be, AVAX, ADA, like these are coins that have a network, and the growth of the network is going to drive demand the more that people start to use a network that works. And so the reason why people come to crypto is simply because they hear from a friend of a friend of a friend that, hey, I made money here. So then they join the network. And then so the key thing is like, hey, where are you at in the queue? So looking at the cycles, we're able to see a couple things. So after a large expansion, here's the key. This thing went up 93x. So that's how you do that math. You take off the 2 zeros, right? Boom, 93x. After something goes up 93x, it's going to go down. So it goes down 87%. But here's the moment in time. Once you recognize, hey, the gradient of the movement of the price is not going so much to the downside, but it's going more so sideways. This is the accumulation phase. So when did I start this channel? Guess what? We started this channel right about here. So right here, we're talking, May of 2022. That was like when Ethereum was at 900, scooped a whole bunch of that. But we see this sideways action. So the accumulation phase is a time period where you have that sideways action and things are very boring. So write this down, new investors. When things in crypto are boring or just in any investment seems super boring, that's when you should be taking the most action. When things are because things are starting to get a little excited, you want to take less action the more exciting things get. I know it's very counterintuitive, a little contrarian from what we would expect, but the key thing is when things are exciting, guess what? That means the price is skyrocketing. And so you don't want to be that person chasing a price. You always want to let it come to you is what I call it. So accumulation phase. But here's the thing is after a nice accumulation, people are going to protect their cost basis. New people are going to hear about, okay, this thing's going up a little bit. Now you start to see a nice growth pattern. So you don't see that nice hockey stick quite yet, but you see a steady stream of sideways to upside movement. And that's kind of where we're already at now. And then after that, this is, and typically, because we're going to line it up, we're going to talk about where the halving sit. After the halving, this is typically when you hit that bubble / euphoria phase and everybody's happy. But this is when all the short-term holders, all the tourists, all the people that really don't know nothing about investing, even they're putting money in, not understanding that they're buying the top. And then so watching stuff like this can help you be so informed that you're going to notice, you're going to feel it. When people are calling you, hey, man, what was that one coin that you said that you bought like 2 years ago or like a year and a half ago? Like, hey, what was that about? Hey, I need some help. I want to buy some. Is it like Coinbase? They're going to start asking all these questions, not know anything about investing. But the key thing is, we thank you for your service, because essentially for us that have been buying, doing the right thing, or I would say the more advantageous thing, and buying things at a low cost, yeah, they're going to pump the price up. And that's with all markets, not with crypto only. It's with real estate. When there's a lot of people that wants to buy a house because of low mortgage rates, guess what? Prices are going up. So if you already own the house, you're winning. So that's why it's about owning the asset first and foremost, key. But then from there, we're wanting to say, okay, well, what does that expansion look like? How many people are coming to this market? And it's multiples. We're talking about, not tens of millions, potentially hundreds of millions this time around for this bull run. So yeah, you have expansion of price, and then you have a bear market. Same thing. You have another accumulation range. Then you have that phase of growth, and then you have a nice bull run. Bear run, accumulation of where we are now, or where we just got through, and then growth. So there's 4 different phases. And so to kind of like talk about it, to give you guys like an aspect, and I'll just kind of freestyle it to in a standpoint, like when the most bearish like sentiment is there, like everybody's like, oh man, why do we even invest? Like crypto ain't gonna make it. Like, oh, this is crazy. That's the accumulation phase. Like, and everybody's already wrecked, and we've seen that. FTX done, like Celsius done, 3 O's Capital done, Luna done, blown up. They're not even in the crypto sphere anymore. All that leverage got washed out. That means, okay, cool. Things are settled down. The leverage has flushed out. Now we can start to accumulate. And then typically you're going to find this around, within the range, within the bottom. And sometimes that bottom can last or the accumulation can last for maybe 6 months or anywhere from a year and a quarter. So accumulation range. Now the continuation is that growth period of like, okay, cool. Like we started off good. 2023 was good. 2024 is like a nice continuation going into the halving. And so the halving is, like I said, it's going to be able to shrink that supply in inflation coming in. But at the same time, hopefully we have more demand as prices start to ratchet up because of these things. And so, new all-time highs typically happen in the continuation phase, which is, looking like the end of this year. So now the parabolic phase, that's for 2025. And this is when, like I said, extreme volatility. the rapid price increase of all kind of stuff. But at the same time, you're going to have something that goes up 5x and then they're going to drop off 50%. And then it'll go up another like 7x. It's crazy. But, this stuff gets really, really exciting, but it gets very risky. And honestly, sometimes for a lot of people, very confusing because they don't know what to do. Should I take profits here? Or, what should I do? Should I add more? It's like all these emotions. So it's very key to have a plan, especially for the parabolic phase. And we talk about this a lot in the Vaults of Crypto. If you guys have not had a chance to look at it, definitely go to the website, look at what's being offered. Like essentially, we're offering not just a set of indicators, but we're offering the just due of a group that is accumulating knowledge to be able to make it, because you might be able to invest in something, but making it as an investor is a completely different thing. And then so we're doing a lot of good stuff in there. And then you have the correction. And then so what does the correction look like? For example, 80% down draws, and you're going from an all-time high of 69K to 15K. So that's the crypto market cycle. Now the key thing is, how do you operate during each phase? Like, what is the mindset? What do you do with your actual units of account? How do you invest them? Or, what does it look like for you? Depends on how long you've been investing. There's a lot of questions I ask when it talks about, or when we're talking about, okay, what phase are we in? So let's see what the chat has to say. A lot of good talking that talk today. Just essentially about the market cycle, all that good stuff. So let's go. Made it large and in charge. What to do? Let's see here. Yes, sir. Glad everybody is enjoying the time, enjoying the stream. Everybody's friendly today. And I'm glad. I don't have any, to this day, I don't have any stream haters. Nobody in here talking crazy, which is, I'm sure it'll come at some point. But we're all heading in the right direction because we're all trying to just have more understanding. When you have more understanding, you have more possible moves that you can make that can benefit you. So, what do you guys think? How do you guys, or for those that have been in more than one cycle, how do you feel this time around compared to last time? And I'll definitely give you my 2 cents on the cycle that I participated in prior to this, how it went, what I think that I could have, because here's the thing, people won't admit what they can do better. I have no problem saying, hey, this is what I've learned. This is what can be better. And this is what has been better since I've learned this, especially in last cycle. And so if y'all have quick little idea, like how do you compare this cycle, how it's going for you compared to last? For me, it's literally like last cycle I did pretty, look, I'm not gonna, I ain't gonna get out there too much, but last cycle I did very solid, I would say. Solid. But this cycle, oh my gosh, it's not even like, there's no words that's gonna express where things are already at, but then even what they will be, from the way that I attack this cycle. So, and guess what? I'm getting everything, every scrap when we get to those very expensive prices. Trust me, like I'm getting everything that's owed to me because I've done due diligence and I've put in the hard work and I've done the streams and I've done the research, not like all this stuff. And I'm so confident about it. And so like y'all need to be talking how I'm talking, because if you've done what you need to do, it's going to be real live for you here sitting in about like a year and a half from now. So, until then, I'll kind of share my story. So, introduction into BTC, first heard about it, but didn't take any action in 2017. Took action in, early 2019. So, bought BTC first, then bought Ethereum. Didn't have too much expectations for it. Then COVID came back around. Double and triple dipped, but more so into Ethereum. Seeing Ethereum go from $200 to $3,000, and I was like, "Whoa, what the heck? This is real. I need to know more about this." Got some good information. Took courses, did all kind of due diligence, talked to as many people that I could that had crypto. Started DCAing just a bit more, but not too much. But the thing is this: I experienced some really good numbers up front. Dipped into some more altcoins, especially when I seen things kind of going to make new highs. But same thing, my experience. Then I grabbed stuff like Solana. My first time buying Solana was at like $14, which was really cool. Seeing Solana go from 14 to $250. So that was, expansive, right? all kind of things. And so then learned about phantom ecosystem and all this stuff. But nonetheless, I learned about yield farming and trying to get extra yield. Like I did a stream about that yesterday, which was, hey, don't chase yield. I did that. I chased yield. I made a lot of money off of it, but hey, I got burnt in a couple places just simply because I stayed in too long. And so typically you shouldn't be chasing yield at the tip top of the market. You got to know when the party is over. And that's a conversation that we had in the last stream. If you don't know about that, go check out the last stream. But in the gist of it, the biggest thing that I'm so glad that I did was, throughout, I'm talking about, in November, December, January of 2022, took some profits, and I kind of, I took those profits, not enough, right? Like I wish I would have taken 95% of what I had, but I'm talking about, I'm taking 60 to 70% of profits. I left a good amount on the table still, because who knows, things could have gone up, but I was like, dang it, I wish I took more. So that's hindsight. And then so going through that bear market, I'm like, it feels like a bear market, but it really got confirmed to me when we really started to experience Luna and all this stuff just blowing up. And then so by that time in between, I'm talking like, COVID especially, till the bear market, which like really in my eyes started in June of 2022. Man, I learned everything that I could under the sun, to where I was so confident that I knew that, all right, like May, June of 2022, this is when I got to re-up. So all those profits that I took, guess what? Got redistributed back. All the new money that I made in the meantime, not all, but good portion, got redistributed back. Sold some stuff so I could redistribute back. Post chain, had been sacrificed for post chain and post X. Those came out, that dumped. Guess what? Throw more. 2023 post chain was like, people hate it, down 85%. Guess what? Threw more. In my eyes, I'm like, look, I already know what's about to happen from my due diligence. So the thing is, I learned how to be on sides, and I use those terms all the time: being on sides versus being off sides. And my understanding of on-chain data has been a great value to me, because it allows me to understand, hey, where's the cost basis of most people? What are the trends of what long-term holders like to do? What are things like the realized price, the NVRV? How can we understand the net unrealized price for each cohort? What are some of the hodl waves, some of the distribution that we find in certain parts of the cycle? So all of these things matter. And so my understanding through the bear market was like, oh, I already know where we're at. So yeah, for me, it's been an incredible journey. I can't wait, because it's going to get even better all the way to even to 2030, And the key thing is, because the biggest thing, I'm just glad that I identified the right asset. That's the key. You need to do a lot of identification and understanding. And once you have that, you can have it work for you. So it's been a great ride. I think the confidence level is, and I don't think anybody should ever be 100% confident, but my confidence in 2020 was maybe about like a 40%. I would say now my confidence level is in the 90th percentile for sure now. Understanding volatility much better, understanding risk, understanding cost bases, understanding ways to DCA out, liquidity pools, XYZ. And so all of this information I share with everybody in the Vaults of Crypto. So it's a beautiful thing when you feel like you're enlightened about something that you're participating in. So we got something here. So Dan T, 2022 was a wild ride. So many crypto companies failing because of greed, 100%. And the reason that, and I'll put that back up. So the reason that happens is because there's an excess of liquidity on the long side when it comes to leverage. So basically, people are betting that things are always going to keep going up after things have already gone up very considerably. And then so people make dumb decisions, like, people go ahead and take loans out when, things are at a much higher price, because they have that. It's because it's an emotional thing. They have that FOMO, that fear of missing out of even more gains, because they didn't have the bag size that they probably needed or they would like, because they have an arbitrary number that they're trying to get into their head. Like, oh, I need that $1 million exactly. Nah, how about just like go ahead and, like, you've already taken your 100K to 850K. Go ahead and take that. But let me leverage up a little bit more so I can just like visually see $1 million in my account. And that's a dangerous place, because now you find yourself doing things that you probably shouldn't do or wouldn't do in any other circumstance. And so, yeah, doesn't matter if you're a retail investor, someone sophisticated, or even an institution, or for that matter, a crypto exchange like FTX. People are going to make dumb decisions simply trying to float something that's not supposed to be floating. And guess what? Once you have a hole in your ship, it's gonna be a slow leak. You can cover it for a little bit, but guess what? If the foundation ain't right, it's all gonna crumble. So that's what happened to a lot of these crypto companies. And so, seeing all that should be a good thing for your memory bank, because guess what? Something similar, but not the exact same thing, is gonna happen. Because even the cycle before with Mt. Gox, all this stuff, China banning so many things within crypto so many times, like these are not new things as far as like leverage basically being pulled out of the system and things starting to crumble. And this is not just within crypto, this is within finance in general, stocks as well. So it was a wild ride, but 2023 was like, it's like a roller coaster. 2023 was like that moment of time where it's just like, okay, cool, like boom, okay, it goes down, and then cool, coming back up. So 2024, yeah, looking pretty frosty. So yeah, everybody's gonna have a crypto story. What I will say is buying at the top. Basically, if you're buying anywhere near or past the all-time high, I'll give you guys some fish. I'll give you guys some nuggets here. If you find yourself buying crypto after BTC has gone past its all-time high, you're putting yourself at a higher risk premium. You're gonna give your chance to fail sooner versus be on the right side of this thing. So kind of keep that in mind as the halving passes and things start to get really rocking and running. But yeah, so let's go into a little bit more talking about this market cycle, and then we'll wrap this one up. We'll see if we can get this one done in an hour. So the market cycle for crypto is it's and a lot of people like to look at like the cheat sheet. It's like the Wall Street cheat sheet. I think what I'll do here is, because we looked at that, we kind of got a good understanding of that. That's also just talking about like, hey, just like a visual of, hey, things are going up way more than they're ever going down. So we know that already. We looked at that. Okay, cool. So more detail. So here we have Investopedia.com. Investopedia, same thing, just using different terms, right? Instead of accumulation, which they're still using accumulation, or like the growth phase, they're calling it the markup phase. And so different term for the same type of outcome. Now, let's talk about a little bit more of the distribution and the markdown phase, and we'll actually, trek over to Bitcoin. So the markup phase is like, as we can see, this is the time period after everyone has accumulated, everybody's excited, prices are going up. Now, distribution can be very, very methodical. It can be a little bit like, like what's really going on here? You're a little confused. Like, so if you find yourself saying, hey, I'm confused after prices have gone up considerably, guess what? You're most likely in a distribution phase before a markdown or a bear run. So let me actually show you guys what that looks like on the BTC chart. And we're going to use the last cycle to really hone in and understand, hey, what does real distribution at the top look like? Because it can be very methodical. If you're not paying close enough attention, looking at the right metrics, you will miss it. And you will think that we're going to keep going up. So this is something that's key to understand. So distribution. Now, as we know, the markup phase, and we'll start to use some of the terms. So we can start to see this here in real terms, in real language. Markup / growth. So the markup / growth. This is, what this looks like here. So we got that there, markup and growth. We got that here, markup and growth. Now, the key thing is like what I have here is this is the previous all-time high in the white line. Once you get past the previous all-time high, that's when you see the most expansiveness for the asset class. So you got your markup. Now, distribution. What does that look like? And you could see it where things tend to take a little breather, but then you have some really crazy wicks to the downside. So, for example, you say, okay, cool. Ha, 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 ha. I'm enjoying my time. Let's actually zoom in. Let's actually go through the experience. I want to put this on like a 12-hour chart. So let's actually take this back and let's say, hey, we're a person that is like in this thing full-fledged. So we're getting into crypto. All right, COVID is here. All right, cool. I heard that, I should be, DCAing on dips. So that's what Swerve told me. So cool. So you start to do that. And it's like, okay, cool. Prices are going up for me. Okay, COVID. You invested somewhere in COVID. Boom. You just pop up for Bitcoin. Easy 40%. Oh, this is easy. Investing is easy. Like, I'm the best. This is like, what people who invest for the first time think. And then there's like that boring time. So you have a period of just like stagnation. And there's like, I'm not going to really buy nothing. This didn't really keep doing what I thought, when really they should still be buying. Like, this is still a golden time to still accumulate, right? Because COVID was a gift. So you had essentially 87 days to just like stack up, keep building your house brick by brick. And then it's like, oh, you get another little pop. And so it's like, yes, I'm winning. 30% up. Cool. I'm a genius. Back to me being on top. And then so from your cost entry, you might be up 73%. Now it's not a double yet, but you're feeling yourself. And then boom, you're gonna experience this first, like, oh snap, are we done? Is this going back down? And these large candles, 22%, 20% down draw. Oh snap. Guess what? You're not gonna DCA because you're a new guy. You're like, or a new gal. You're like, man, I lost. You're looking at the most recent price that you had, the most recent amount of money you've seen in that account. So you're just like, man, my 10K just went down to 8K. Man, I just got this money. You're probably gonna think about probably selling something. You're definitely not gonna add more. And so I'm telling you, this is what a lot of people do. If they did get in right here for their first time, they're probably gonna sell that first major down draw to an extent, at least a little bit of their portfolio. But they didn't realize that they're still in the growth phase, like the beginning of it, 4-year cycle. And then so this is that hockey stick moment when things are like, yeah, let's get it. Boom, up 3x from that point. So from your cost basis, you might be sitting at a nice, 5x, feeling real nice. So cool. Like, you're like, oh, I'm back up. Now the new investor, they're gonna feel this, and there's like, man, imagine if I would have started off with 10,000 or 5,000 more dollars, or whatever, 100 more, whatever you're doing. There's like, man, okay, well, let me try to put that in now. So, because I want to get to, they start at 10K, for example. It went up to, let's say, 7K. They're like, man, I got to get to 50K. So let me like put in like 5 more K. They'll take it out their savings. They'll maybe sell something and not even realize it's like, yo, like the most of this move is pretty much almost done, But same thing, they don't know the cycle, so they don't know that. And then so they're going to put in, maybe like an additional 5K. So their portfolio is showing them like 15K or so, somewhere like right up in here. And then before they know it, guess what? Boom, another large dip. Boom, 30% this time. So like that new money that they just put in, they almost lost dang near half of it or a third of it. They're like, what the heck? Oh, this is a scam. And they'll probably take it back out. Same thing here, not knowing if they were going to do anything, they should just dollar cost average lower if they recently put new capital in. But here's the thing. Now the distribution phase is where things just start to stall out. Not just once, but you're going to see, I like to call this the crown. Like, you want to draw this right across, it looks like a little crown, right? King's crown. And so the crown is basically saying, hey, like, it's like a car running out of gas. It's like, yo, I'm on my last 3 miles, bruh. And then capitulation happens. And so capitulation in crypto is anything that's larger than 30%. This is capitulation. So now you go down 50%. So at this moment, if crypto ever goes down 50% in a quick time frame like how it has in this scenario here, you should know party is over. Now, here's the thing. A lot of people get confused about this. Okay, yeah, but it went back up, because even me, I seen that 50% drawback, was like, all right, cool. And I actually DCA'd more. So that means I bought more Solana. I bought more because Solana really didn't top out to this period here. And a lot of these other cryptocurrencies didn't top out to this period here. But this is just all the extra leverage. We had so much stimulus. People out here taking extra loans. Interest rates are low, where we had that secondary pump, which we don't always get, by the way. But all the on-chain indicators were saying, hey, there's just not enough inertia, not enough like new market demand, because these are just people like just re-leveraging up off of this move. This is not new market demand. But then we stall out. And then same thing, you have that I'm on my last 3 miles of gas, and then capitulation. And then so you see these wicks. It's so crazy because I can remember this. I remember I was in California, and I literally remember this wick right here. I literally remember this. Look, this wick and this particular day right here, I'm like, what the heck is going on? Because, price is still at 53K. So you're like, okay, things are still looking fairly decent to a certain standpoint. But this one right here was like, okay, something is up. Where Bitcoin in one day went down like 21%. I was like, oh snap, yeah. Because this was I remember this is like the beginning of December. 2021. So I was just like, yeah, things are looking a little frothy. And so for me, like I had already taken some profits up in here in October, November, but then I really got serious about taking those profits on the back end once I started feeling this, December of 2021. But the confusion was this sideways action here where a lot of people are like, nah, it's going to keep going. It's going to go up for a third top. And I'm just like, nah. If it couldn't do it for the second time, it ain't going to do it for the third time. And then this is when the deleveraging starts to happen. You have your Luna, you have your 3 Arrows Capital. So Luna here, 3 Arrows Capital here, FTX here. 3 major capitulations leading to the bottom pricing. So a person going through that for the first time and unfortunately, like, what I was saying, a lot of people that are new or new into crypto, they didn't even get in for like, most of them didn't even get in at this first top. They came in at the second top. The top that, we were shocked to even see. They came in here. And a lot of them really like mainly because it's like, okay, it's not a bear market. We came back up. So a lot of people got stuck or, for example, only wanted to buy when things were up in this area pretty much. So we're talking people that were like August of 20. And quote me if I'm wrong. I've talked to so many people and I always ask them, hey, how's crypto going for you? And depending on their answer, they're like, they start like that. I already know. Let me guess. You started investing in crypto probably late 2021, huh? Every single time the answer is yes. Because they bought after all, like, think about it. Like, and it's not just this cycle. They bought after all of this other price action that happened the years and years and years and years and years before them. And same thing, just like how these people bought here, there's that distribution. Guess what? Bear market. But if you just hold tight, here's the thing. If you hold tight, DCA lower. So buy the asset when nobody wants it, lower your cost basis. Boom. You're going to have time periods where you're going to go past that all-time high, make a new all-time high. Same thing here. You're going to go past this all-time high if you bought this, and then make a new all-time high. Same thing here. As you can already see, we've already done majority of that move back towards all-time high. We're almost there. I mean, simply Bitcoin is just another 70% away from all-time highs. And we've already traveled basically, essentially at the best part of it, almost 200%. So that being said, we're more than 2/3 of the way there. And law of gravity to the upside kind of tells me, guess what? If they're making some more money this year, 2024, which they are, there's a good chance that money will find its way into crypto and we make it back up to all-time highs. But the key is, hey, we'll go past all-time highs. And so don't only buy things when they're at all-time highs, buy them before, and then so there's some wiggle room. But this is the emotional side, like all these little ups and downs. This is the emotional side of a cycle. And so if you can temper your emotions, understand what's going on here, understand the way that things rock and roll, you're good. And then so the accumulation phase, and like, because let's actually look at altcoins, for example. So we'll look at total 3. So these are all the altcoins, things that are going to outperform Bitcoin. Same things kind of remain. Like I'm saying, you're on sides essentially if you're buying your altcoins before they reach the market cap of 550 billion. But all of this beautiful accumulation, which we really didn't pop out of that accumulation range up until, we're talking really a couple months ago. And it may be a scenario where we pop back down into it. And then so there's going to be a large accumulation range for altcoins because Bitcoin takes off first, then altcoins follow. But same thing, we're accumulation range, hockey stick, and most people only want to buy their altcoins, their Cardano and their Phantom and their meme coins and their NFTs that they paid like way too much for. It's like, come on, But same thing, you don't know what you don't know. So the people that bought up here, they're still underwater on their altcoins. And in certain cases, they're probably underwater still 50 to 70%. So with that being said, how do you fix that? Is by making moves down here as well, holding that conviction, because guess what? Just like how Bitcoin continued to make new highs, altcoin markets are going to keep doing the same, just like it did here in time past. So let's redo that. So time past, at the very tip top, altcoin market cap got to about 347 billion, and it made a new high the following cycle, sitting at about like a little bit more than a trillion. And so the key thing is this, like, if you are investing in altcoins after we've reached a market cap of 1 trillion, guess what? You are, let's put it even bigger. You are mega, this is big as we can go. You're a mega offsides, exclamation mark. Offsides basically meaning you're making the top if you're doing this, So we got some wiggle room, and things are looking pretty solid. So this is the aspect of going through talking about market cycles. Very important. I'm gonna show you guys one more thing here on Twitter. So there is a Twitter that I would very much encourage you guys to take a look at. The Rational Root does a good job of depicting market cycles here on x.com. And here's the thing. Now, talking about the halving is very important, because like we talked about, there's key things that tend to happen. And I'll share this sauce with you guys here. There's short-term holders, and in the group chat, like we really dive in on why that's important. But I'll just mention it for here. Short-term holders, big deal, big thing to pay attention to. Now, as we see every halving, so the halving is here, right here, these black lines, you see that hockey stick where prices start to go expansive. So we see it here, we see it here, we see it here, we see it here, and we got the halving coming up in April, a couple months from now. So the biggest thing to understand is that once we get to the halving, we are past the 50% mark for, like, from price low to high, essentially. So we're halfway there. And so the key thing is this. You want to be on sides or off sides. So the 50-yard line is kind of what we're looking at here, y'all. I'm put this in football terms, right? The 50-yard line is where we're at, coming up here in April. Either you can be on sides before the 50-yard line, or you can wait till we're basically at the 1-yard line, which is kind of like, basically like 99% of the way done with the cycle, essentially, is kind of what I'm saying here. And only buy when everyone else is willing to buy. But that's the key. If you're not willing to buy when no one's willing to buy, you're probably not going to get the return, because guess what? Frankly, you don't deserve it. Like, that's kind of, I remember somebody said that to me in regards to, athletics, man. It's just like, if you're simply just doing the same thing that everybody else is doing, just, all right, cool, I'll go to the gym once a week, or I'll work out, once a week, or I'll just go to practice. I'm not going to do anything extra. Guess what? You don't deserve to be All-American. You don't deserve to make it to the Senior Bowl. You don't deserve to go to the NFL. Like, I heard that from a college coach. I was like, dang, he ain't lying. Like, so basically it's like, if you're not doing the stuff that most people aren't doing, guess what? You're probably not going to deserve that 50X. That's just the truth of the matter. Like, somebody's got to be honest. I'm the person that's going to be honest here. So if you want the 50X, if you want the 10X, whatever, you've got to make the moves while things are still on sides. So very important thing to look at, but just like really depicting, seeing these rallies kind of coming up into the halving here and there, but then also that expansive time period where the short-term holder cost basis, we have several standard deviations with price above the short-term holder cost basis. So that should let you know. So that's all I got for y'all today. A lot of stuff in the stream. Definitely trying to put some things into some perspective for us. And, this is one of those things that we've got to definitely look back on this stream, let's say like 6 to 7 months from now. And I'm not going to say like, you know what, y'all should listen. But at the same time, I'll probably be like, hey, man, I talked about this. Go check it out, So definitely. Let's see what else we got. Started in January 2022. I was your exit liquidity. Yeah, man. Because I remember specifically, like, because I wasn't gonna, like, because and I'll be honest. So previously, a business that I was into and doing was an exotic car rental. And so this is 2021, 2022. What I basically did during that time, I remember it like it was the other day. I used a lot of that liquidity from crypto to go and buy an exotic car, and I just paid it cash to rent it out. And the thing is, when you get certain cars, they don't lose much value, and so I was getting cash flow because I was renting it out. So it was a really good play for me. But yeah, I was like, yeah, I took like a lot of alluvium at the time. Like alluvium, I think was at like, I don't even remember, like 1,200, 1,300 bucks, something like that. Um, took some Ethereum, took a little bit of everything. But same thing, I still had, pretty big heavy bags. I had some, and I'm being, like I said, I'm being transparent. I had a good amount of liquidity and yield farms on the Phantom ecosystem. Just like, I was like, oh, I'm just leaving it in here. It's going to keep printing me money. That dwindled down, and I left things in there. So like, I'm being honest. I'm talking about like positions that were like several five figures dwindled down to four figures. I'm like, yo, what happened to the liquidity here? Uh, Permanent loss, brother. So you're gonna have those teaching mechanisms and stuff like that. But yeah, man, liquidity is going to be either going on the entry side, so at the right time, or yeah, you could be exit liquidity. Who do you want to be? So this cycle, good stuff, man. And I appreciate y'all for sharing that aspect. So I got in October 2021, had no clue, learned through the whole bear, and there you go. Like that's the thing. Like for me, 2019, I just, like, because I was going to really do the same thing in 2017. I was like, man, let me just try this Bitcoin stuff, but I just didn't. I was too wrapped up into like real estate and all that kind of stuff. I didn't have the time to really like do my due diligence. And one thing I just know about myself, I typically don't put money towards something that I don't know nothing about. But a lot of people do that here within crypto. So like now that we know about it, it's like, oh, okay, cool. Like the cycle it's in the bag. Like it's already in the bag. We already know what to do. So good deal. Well, I appreciate y'all's time tonight. We definitely got another stream coming through. So I'm thinking what the rotation is going to be from here on out, and I'm going to be as consistent as possible. Is I'm going to have a rotation for Monday, Wednesday, Friday. Monday it could be in the morning time or it could be in the evening time, but Wednesday and Friday it's going to be in the evening time, typically around 8 p.m. Central Standard Time. That's what works for me, and we'll have consistent streams going across a variety of topics, but the key thing is, not just getting a taste of information, now taking action on information. So having the tools to do that, we got that in the Volta Crypto. Let me go ahead and bring that up real quick right before we head off. Definitely check it out. It's a lot of value over here, and at the end of the day, you're looking for value not just within investing, but then also from the aspect of saying, "Hey, my knowledge." So let me see if I can bring that up real quick. So Bolsa Crypto, and the key is this. TA, like what I did was I didn't really do too much TA, but I was able to look at that chart. There's a lot of things that you can do to help you make your decisions from a TA standpoint, but then also on-chain data standpoint. And then so we have a nice package for you guys of indicators that are invite only, things that I've coded up together from my experience, things that I know that have helped me really kill the bear market, and things that I know are going to help me kill the bull market. If you guys want access, definitely click the join now. We got a nice group of guys in there already making money, already talking about new developments and things as they are coming out in real time. You don't be late, because I don't talk about everything here on YouTube. I'll talk about maybe like 30 to 40% of things here on YouTube. So hit that join now. But if you're still like, I'm not quite sure, come and get some of this free stuff. So if you want to look at some of the market, you can definitely check out the aspect of seeing the market caps for a lot of things, Bitcoin, Ethereum, et cetera, et cetera. Look at the heat map. So get a standpoint of heat. Is it a down day or up day? Little tip, if you're investing, probably want to be investing on down days. So, maybe today could be a DCA for you. Check Solana, Ethereum, see what is the current price. Some of these coins and these are coins that, hey, yeah, I got them on here for a reason. I'll say that. So things to look into just to get a good idea of where they are faring. But then get the news, right? So come and get the most frequent news within not just crypto, but just in general, all the asset classes. So we're talking about things between the euro dollar and the dollar. And so things going on with Microsoft, looking at their revenue. Looks like they did a growth expansion here. So they're looking pretty good. SPX news, dollar news, all kind of stuff. So come and get the news. But then outside of that, there's on-chain data. These are things that can help you understand the aspects of, hey, how are people feeling? So got the fear and greed index looking pretty moderate today, kind of hop back into that greenish tone. So we're at 63 out of 100. A lot of other stuff, things you may not understand, or you may, depending on what you know. But if you don't understand this stuff, you can definitely understand it more by hitting that join now button under the services tab. So with that being said, yeah, good stream. I hope that you guys really got some good value from it. I know I did. And yeah, I will be catching you guys here on Friday at about 8 o'clock. And until then, be good. Go out there, work hard, make that bread, stack it up, get in a good asset, and enjoy the ride. Until then, peace.